Hello, fellow traders, and welcome to another episode of Unconventional Forex Trading channel. I hope today to be relatively brief. Today it's Friday, the 6th of March 2020. I will show you another practical example of mathematical analysis applied to Forex market and the relative results. Just bear with me for the length of this video. Today I'm doing this video with a specific request. Let's say I got two requests in real along the time, but with the second one, always via email, I figured out that more of you would have had some questions like this. Basically, the question was that normally I do make examples mirroring my trades on demo accounts, but I always use, a demo account with 10,000 units of currency balance and also with a higher leverage. And the question that I got from one of you, I will not say the name of course for privacy reasons, but was pretty legitimate to do. This guy was asking that how it's possible, or if it's possible, to trade by having a normal setup of account. What I mean that this guy was asking about, I have about 1,000 euros to trade, so not 10,000 but 1,000 euros, and I'm also trading by using an account with a leverage of 100 to 1. Okay, so not 500 leverage, but 100 leverage. As I normally do not speak that much also about money management and also lot size for as regard the trading positions, I decided during the week to make an account for purposes of educational purposes, and to do some kind of replication of what is the normal expectation of profit by using, of course, my own methodology. At least I can speak for the way I do approach to Forex analysis and therefore Forex trading. But it's something very subjective. This is not an invitation to trade or whatever, but if you are interested in Forex analysis, whatever, and you are not very satisfied by indicators or fancy expert advisors or trading robots, and you are more focused on manual trading anyway, this kind of approach seems to reveal good results in terms of profitability, even with small accounts and with small leverage, which means a restricted amount of money that we can put in the market and trade in order to get our equity rising. So as I will show you now directly, I will go directly to the point. I created a demo account as usual, mirroring the trades of today. Let's just have a brief note on this. So the account was founded with 1,000 units, so 1,000 euros, whatever it is, I don't know. But anyway, 1,000 units, and with a leverage of 100 to 1. You will also see in the statement, in the final statement. Of course, I traded just this morning within the London session, and of course I closed my trades about half an hour before the release of the non-farm payrolls, which of course can create some kind of big spikes, and in the beginning of the American session, of course, but just to show what can be done on a daily basis in terms of profit by using some math and some analysis and some logical considerations. Of course, this is related to a normal day trading activity, so I also measured the lot size, okay, and I got some kind of money management on this, just to give also an example of how to behave in the circumstances where every normal trader could afford, so roughly 1,000 euros of balance, and trading lot sizes in this case of 0.03. So of course I'm running my usual UFO, expert advisor, which of course provides me strength and weakness of the currencies. This is a part of my strategy, and I'm using this in order to confirm what I also have in my Excel spreadsheets. I'm showing you here. Basically, this is the development of the day, always reading right to left. So here we have the currencies, and here we have the 28 pairs normalized. The black line that you see here is basically the euro dollar. Let's see if you can see that. Okay, so this is also the behavior of euro dollar. Markets started here, so here is the open of the day, and so we have the development of all the currencies. Normally my workflow starts from the analysis of these Excel spreadsheets, and in conjunction also then with a double confirmation provided my expert advisor UFO, the one that I have created. And just a brief, prior to proceed, just a brief explanation on how things are working in terms of analysis. Basically, I have these 8 lines, which are the 8 currencies that I get from my calculations, and so here I have the black one is the New Zealand dollar, the brown is the Japanese yen, the yellow is the Swiss franc, then let's see it here, the purple is the GBP, the green is the Aussie, the Australian dollar, then the grey one is the CAD, and the red one is the dollar. Of course the blue, it's here, is the euro. So pardon. So from the beginning of the day I started to see a development of the currencies. So the first assumptions that I made, of course I woke up just a couple of hours before the starting of the European London session. We're about to see some strength of New Zealand dollar and Japanese yen, even with some oscillations of course, but there was this kind of strength. There was also starting weakness of the euro, but that was also going along with the weakness of the euro dollar. When I do mentor, I do explain these things, and also deeply I cannot make, you know, a complete mentoring, even because it will take a lot of time, and because it's something that must be tailored to the needs of everyone. Just to give you rough information, normally when I do consider euro, I also consider dollar. So I consider the euro dollar as the main pair, and so the main combination of currencies that provides equilibrium in the forex market. So by following the euro as a negative, that someone could have thought about thinking in terms of selling euro, in real that would have been a trade to do if the dollar would have been on the positive side, so if it would have been on the buy side. But as you can see, euro and dollar, let's see this by making this simple double. Euro and dollar were somehow going along this way, so this is always the beginning of the day, and blue is the euro, red is the dollar, so even dollar was going down, and in fact there was a relative strength of euro against dollar, therefore euro was in a buy direction, was long. Okay, in fact at this point 25 bars, 15 minutes time frame from now, this is the moment, the present, we got this great divergence between euro and dollar in favor of euro. Okay, so other assumptions that I made, there was this Aussie moving. Of course, we have to understand that at the beginning of the day in the Asian session, we have these major currencies that then can preserve their trend or invert their trend in the following sessions, which are Aussie, New Zealand dollar and yen, and then of course in the next session take more place euro, GBP, Swiss franc, and also of course dollar related to the other currencies. Also, I after checking this scenario and figuring out what could have been the setup of the day for trading, I also searched for some confirmation on this chart on the right, which basically is like analyzing 28 currency pairs all of the time in just one chart, because they are normalized. So as you may notice here, we can see all the currency pairs, and therefore I could have some information related to certain currency, because for example by watching, as I told you, the euro falling down but as well the dollar falling down, I wanted to check for example the euro CAD, which was not falling that much down and was also following the euro dollar in the sense of going up. So somehow I was thinking more to buy euro than selling it. Okay, so but this is a process, you know, that takes some moments, but a very small amount of time compared to analyzing on MetaTrader 28 charts and clustering them by currency, which take of course a lot of more fatigue and stress, mental stress, in order to figure out what to do. So after analyzing both the elements, and of course I can tell you briefly that by having, in order to have, I will do an update now, so I will also give an overview of how this even if I made previous videos, and I strongly suggest you to go back and watch them if you're new to this channel. I just show you, I will make an update so you will see that these values are updating in real time in a matter of seconds. Basically on my MetaTrader, along with the UFO, which confirms anyway in the long term, this is the daily, and of course this is the euro dollar daily. So we saw that the euro dollar was up of about 100 pips. And in fact my values here are confirming that euro is positive and dollar is negative. What else? We got CAD is very negative, and we can see here from our chart, if we select only the CAD for a second, from the starting of the day we got just this raise up with this strong level of resistance that was not broken, and then going down, then returning back to the zero level, and then falling down. This is the Canadian dollar. Okay, so that was making sense to me enough to inject my trades the way I did it. I was saying on this MetaTrader, all these expert advisors are created by me, so I exactly know what I'm doing. I have this expert advisor which basically works in the sense of pulling out data from MetaTrader and creating some CSV files that then, by some Visual Basic operations in Excel, are imported in Excel and then are updated always in Excel, generating by updating all the formulas that are in all my tabs, and updating all the final results. So what we see here basically now is creating new data, and the new data are in the folder of MetaTrader and in the folder files, and we see here now is creating again. Files are created, then left there for some seconds to allow the user to update Excel, and then they are erased, and then they are recreated again. Why this? Because this way the close of the present moment are always updated to the latest values. Okay, so now we will wait some seconds, then the files are deleted, now they are regenerated, and if I go and now I start to double click here, see that this value is going updating. We are 100% data loaded, and now I will create an update of my files, and you will see magically that here the charts will update consequently with the latest close, and of course there is this advancement. Of course I decided to stop my trades prior to the release of the non-farm payrolls. This is the first Friday of the month, because of the high volatility and because we are going towards the ending of the market, so I didn't want to mess up too much, and because I already realized some tangible profit that day by day can compound my balance, increasing it. Okay, so basically this is the way that I do my analysis, and of course all this, as I'm using Excel, it's based on math, so mathematical formulas, because in Forex market we have this peculiarity which is unique compared to any other kind of market, where currencies are related one to each other just because we are trading pairs. So when we trade euro dollar, we trade euro in one sense and the dollar in the opposite sense, and this goes for each and every pair. Therefore pairs establish a relation that is stable between every currency. Okay, so this is the unique peculiarity that I found, and that drives me every time to choose the Forex market as my preferred and unique market to trade. Okay, so by giving you a brief overview of this, I think it's enough, and let's proceed also showing you the trades that I made today. Here is a brief recap, of course, and let's see the results. So I'm showing you here the trades I made so you can check, and I strongly invite you as usual to, because also someone can say, oh no, but you are creating something fake, whatever. So you can always check the open time of the trades, and also the direction, the currencies that have been traded, and the price. I'm not trading with stop loss, but I will show you in a moment also in regards to the money management, how do I behave. Okay, so first of all, by having an account of 1,000 euros, okay, and 100 leverage, okay, of course here is the date, whatever, when I took the screenshot. I had to act consequently for as regard the sizing of the lots that I traded. So I decided to use this lot size for every trade. I made, shame on me, something that I should have considered as well, because as you may notice here, I traded twice New Zealand dollar CAD, which was fine, but at the same time I could have also traded, I don't know why I missed this trade, but it happens anyway. It would have been positive as well, because if I am buying New Zealand dollar, therefore I'm determining that CAD is weak, and for example in this case I sell Aussie and I buy Japanese yen, so I decide that Japanese yen is strong. I could have also trade Canadian dollar yen, selling Canadian dollar and buying yen. It would have been another trade, put in the list, but in this case I made only 9 trades in this day instead of 10, but that's fine anyway. So here is the result, which is really good in terms of profit, okay, considering also that I got just one euro of commissions, €1.44 of commissions. So this was the the total profit, that then I got to take off these costs. Basically I made today the 12% on my balance. Think in terms that at bank, if you give to them your money blocked in a fund for 1 year, maybe you get from 1 to 2% in 1 year. I made the 12% in 1 day, not even in 1 day, in some hours, and therefore you can make by yourself at least this math, because if you think in terms that you can trade, I don't know, 20 days in a month and compounding an average of 12%, sometimes can be 10, other times can be 15 or 20. It depends also on the volatility. You still remember that today is Friday. By the end of a month, you can really achieve results like 150, 250%. Okay, by making 12-15% every day, and of course maybe not trading all the days, but let's say 20 days in a month could be sufficient. So this is the profitability of my analysis by trading using a math analysis rather than technical or fundamental. Of course I'm adding some fundamental analysis, because I spoke to you about the non-farm payrolls, which is a news event, because it has always to be something that you have to be aware of, because there are also some traders that are taking decisions and that are trading by the data points that they are receiving from the fundamental news. So it makes sense that also fundamental news can affect the direction of a currency pair. So being aware of that can add another layer of security to our trading, which is important. This is part of the risk management. Okay, and of course, you can see by yourself that by watching this chart, actually was one of the, not very few, because in real, if you trade with some coherence and some cautiousness, you can achieve result like this as well, which is 100% of positive results with basically no drawdown. I got a drawdown just a couple of units, not that much, but was basically nothing. And if you can think that 123 euros on 1000 in 6 hours is not enough for you, maybe this is not the channel for you, but I think that by compounding every day of trading an amount like that, by the end of the month, it could be a very good satisfaction. At least for me it is. Okay, so you have to ask yourself and answer yourself as well. So these are the statistics from my trading, and as a final answer, in order also to answer to my followers that wrote me about making an example like this, so more like in the real world with a proportionate and realistic starting balance and realistic lot sizing, and also some money management in this case. Let's check it out as well. I always spoke about the fact that I trade without using stop losses in the traditional sense of stop losses. Okay, even to prove that by analyzing with mathematical approach reduces drastically the risk. Therefore, I test also my algorithms by not using stop loss line that the broker can catch. Okay, so I leave to the pairs the ability to oscillate in order to reach the point that I am targeting. Okay, but anyway, I do use the concept of stop loss. In which way? By using another expert advisor that I created, which is very simple, but at the same time is very effective and helps me to apply a money management approach. Okay, and let's see if I loaded here, probably no. Oh no, here is the CSV, so the pool data from MetaTrader. Here we have the UFO. Let's see if we have it here. Yeah, so basically here, this is my money manager. Okay, which basically by seeing the options, I have only two elements: the stop loss level and the take profit level. Okay, which are set by default this way, but I can always change them in real time. So let's say that I want to have a stop loss level of the 2% and a take profit level of 15%. Okay, and then I update my algorithm. So here you see in my setup I have these values that I just put in that form. And what do I mean with stop level in percentage and take profit level? I mean that if I made 9 trades the overall level that will immediately close all of my trades so that I can rebuild my strategy and start trading without losing that much money will be the 2% on equity. Okay, so if I have 1,000 euros of balance and the overall trades altogether they go below 20 euros because it's the 2%, okay, this expert advisor automatically will close all the trades for me, as well as if I have a profit. So if my balance goes above 150 euros, which is the 15%, I take profit. Of course, I can give minus 2%, minus 5%, minus 50%, depends on my attitude to risk. But as I wanted to make a normal example and also a good behavioral example for the ones that requested via mail this question, but also for all the others, which is important to give the right awareness also for as regard money management, this is the way I do. But instead of calculating and always watching my balance and equity, whatever, I created a simple expert advisor that does the job for me. Okay, so I don't have to think about that. Once the orders are into the panel, then it's about this expert advisor to manage possible losses or possible profits. So this will be more easy. Of course, I have also in this moment I have a break-even situation. Okay, so there's no trading, and of course I have also the alert if I am in loss or in profit. I have also here 100 leverage situation, and of course when the trades are running, I have also the percentage and the number the orders that I have on, and my balance and my equity moving, of course. So I have all the information that I need recapped here for simplicity. In terms of analyzing the trades, of course, we can see without no problems about the euro dollar. Let's see, euro dollar here. I started trading around this time, so these were the pips more or less that I've realized. Also, let me remember, I got the Euro CAD, started around this time. Okay, what else I got? I was not that much happy with GBP Aussie, but that's fine. Let's check this. You know, this was this mess situation, so I barely got it in pair by after a certain point, but there was not that much, probably because of the non-farm payrolls regarding the American session. But anyway, there was this ranging phase that would have been, you know, somehow leveling at least that trade. What else I made? Oh, the Aussie Yen, and yeah, but I read anyway for a GBP that against Aussie went not that well, the GBP against the CAD was more than positive. Okay, and also the Aussie Yen was, we were saying, Aussie Yen also was oscillating, so there was this battle between GBP and Aussie, but at the end it was winning the Yen against the Aussie. Of course, I suffered a little bit in this point, so about 20 pips down, but it was compensating by other currencies that were more than positive. and going about, roughly 40 pips. What else we got? USD yen and Euro CAD. Okay, New Zealand dollar CAD. New Zealand dollar CAD. We saw that. NZD CAD. Okay, and USD yen. USD yen. I was about here, so I got 80 pips. And what I missed, it was the CAD in sell and Japanese yen in buy, which was most similar, but I repeat, once you identify the currencies that are strong and weak, as I already largely explained in my previous webinars and videos, then you know how to set up coherently the pairs accordingly to the strength and the weakness. So if you trade euro dollar buy, then you will not buy dollar against something else, because if you're selling euro dollar, if you're buying euro and selling dollar, this selling dollar has to be for all the other pairs. So you will, it's a double confirmation that you know for sure that USD yen is most likely to be sell rather than buy. Okay, so there is a logic in terms of operativity for this kind of approach that helps also to organize the orders with a coherent setup. Okay, in order to create that synthetic pair, which is the equation generated by putting the orders together with buy and sell order. Okay, so I think that for today and for this explanation, this is quite all that I wanted to say, and I hope that by showing this example I properly answered to the questions I got, and gave also not only by typing some words, but gave a practical example of how to behave and also how to consider the money management. And so it's all for that, and as usual, I wish you a good weekend, a good ending of the week, and also a good starting of the week and trading week as well. And I wish you, of course, good space and good time. Bye.